Good morning. It is February the 13th, 2018. Hypothetical or simulated performance results have certain limitations, unlike an actual performance record. Simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under overcompensated for the impact of any of certain market factors, such as lack of liquidity. Simulated trading programs in general are also subject to the fact they're designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profit or losses similar to those shown. Okay, here we sit. Why is our treasuries higher? Because the Emini is lower. Why is the Emini lower? Equities around the globe. They're blaming the U.S. market's weakness on a weaker dollar. And this morning the dollar is down against both the yen and the euro. So that statement at least is true up until now. So the inverse relationship between treasuries and equities continues. It can last a couple hours into the AM session and they kind of separate. So right now I think the biggest dynamic, given the lack of news, will be the direction of the Emini, whether it sells off or not. And that we'll have to wait and see what that is. So I'm guessing we're still in a trading range. Probably best resistance is 8 to 12 up here, and probably pretty good support in the 20 to 24 area, way down below, and you can see about halfway in between. So I had the first sell 4 to 8, second sell 11 to 15. On the buy side, the first buy was 29.01. It picks up the London low. We're there right now, so I'd like to get it done at 29, back in this area. Down to 27, but that's where resistance is at the moment. Support. And then 20 to 24 for buy 2. The news this morning: small business optimism index, previous month 105.5, 106.9. So businesses remain optimistic, and you see that in a lot of the underlying statistics where businesses are spending. So down to how much higher interest rates can affect or impact equities. And when interest rates historically have started to move higher, equities could rally for another 6 to 9 months. The difference this time, I believe, is that we're coming off of 8 years of stagflation, and that probably has given us a little bit more room to the upside. Okay, 30-year 28 to the buck, number 1. Sell 3 to 7. Sell 11 to 15. On the buy side, we'll make 20 to 24 number 1, 13 to 17 buy 1, 1 to 5 buy 2. I don't have strong feelings this morning about the markets after looking at them, and just may take a while to unfold. And some days you come in and you just know exactly what you should do. Today's not one of those for me. So that probably means trading range when it's all said and done. In my experience, that's the way those days have turned out. Okay, buying in gold started in Asia. Ended, the high came in Europe. We were hoping to be able to sell against 30. We did make it up to 33 plus, so here we sit. Probably, here's the Frankfurt low right here. So if 128, 127 holds, this area right in here, market can still trade higher. And we got resistance starting at 32. So we'll make 32, 34, sell 1. 38 to 40, sell 2. On the buy side, 25, 27, buy 1. And 20 to 22, buy 2. Euro's up, the yen is up, dollar is down. And there's the, actually we probably ought to do it that way. That would be the proper split. So 75 to 85, sell 1. The buck to 10, sell 2. On the buy side, 40 to 50, buy 1. And then 15 to 25, buy 2. It's supposed to be 70 degrees here tomorrow, in the 50s today, so we go from a daytime high of 18, 19 to a daytime high of 70. That's a 50-degree swing. That's over 4 days. That's pretty significant. Crude oil was off when I looked at it this morning. And big picture stuff. This 59 area right up here was pretty important. We busted it. So we have all this volume down at 57 to 58. And so retesting that low is right there. So 57, 58 is going to be our next band of support. Selling started in London, so we've got this low down here at 58.75. Looks like we're going to try to trade lower, so we'll try to buy on the cheap. 75 to 50 with a question mark at the buck. And then buying 58 even, 58 and a quarter for buy 2. On the sell side, limit sell at 59.11. The high volume number up here is 59.30. That'd be a limit sell at 29. So we'll make it 25 to 50, sell 1. 75 to the buck, sell 2. Okay, supposedly all eyes are on tomorrow's news. If the CPI number comes in higher than forecast, the Fed will be raising interest rates 4 times in 2018 as opposed to the projected 3. Sell treasuries. And the interest rate differential, the higher interest rates go, the easier it is to make money in the bond market, to make your returns, so money comes out of the stock market. So that's how that game is played. So right now, higher interest rates are blamed for the selling in the Emini and of course treasuries. This morning, coming into the stock market, we've got China, Shanghai, Hang Seng in Hong Kong, and the FTSE. FTSE was pretty much unchanged, but it was, when I looked at it, up 0.02%. And then we have the ES, and the rest of the market's down. So equities are mixed, but the buying really was in China, and the selling just didn't catch as much of it with the FTSE as you did on the DAX and the CAC. So, and the Emini is lower. So, do we break it today or not? If we come back and if we look at a bar chart, we've tested 25.30 twice. That's 12% plus off the high. Looks like we got a seller at 27 up here. So we're 2,700 plus 25.75 minus market. We're just kind of right in the middle. So this morning, dead cat bounce, selling resumes today. With tomorrow's CPI numbers and retail sales number, I doubt if the selling starts today. So I think we're probably looking at a trading range as the market awaits tomorrow's news. That's my best guess. On the F1 screen, you can see that sellers start up here at 26.85.88, and we rejected prices above 27.25. And you can see that there's a buyer at 25.75. So we're just kind of right here in the middle, looking at a trading range. So yesterday's highs at 70, yesterday's lows at 25. That seems reasonable right now, with tomorrow's news holding us in a trading range. So this first sell band on the idea would be like 54, 59. Picking up that number and that level, and then 64, 69 for sell 2. On the buy side, 36 to 41. And on a 3-minute chart, we're getting some of these 4 and 5 handle bars, so makes it a little tough to come in with a very sharp pencil. The Renko chart is where you're going to get trade location, or have a better shot at getting it. And 25 to 31 for buy 2. So I think we're in a trading range. We'll see if that takes place. The articles are decidedly more bearish overnight and this morning than they were yesterday on the opening. And we'll see if they can break the market like the article suggests they can. Going to take a bit to get everything up, published, the right spot. I'm going to get busy on that. Back with you as soon as possible. No news to speak of this morning. In fact, the news is out. The NIFB Small Business Optimism Index, 106.9, well above previous month at 105.5, I believe.